So moving on to oil. Oil's given up some gains over the past couple of weeks.
Yeah.
Still holding well over 100. We know short oil is one of your biggest contrarian calls at the moment. And I just want to check up on some of the latest developments here. And we have a relevant fan question that hopefully we can segue into. Can you please walk us through how crude oil will crash once it blows the top off of 140s, 150s, unless more oil comes to the market?
Yeah, for sure. I think the best way to start this conversation is to pull up a chart that I made over the weekend
All right.
because I think it really illustrates what's going on here and why it kind of encapsulates why I'm so bullish, really, on this short oil sort of call. So let me pull it up over here, and then let me get the you get the screen share going. Sorry about this, guys. I am
No, we're good.
running a little slow today. Blame the cold. Okay, can we see my screen?
It is coming in. Yep. All right. History returns. Is the current oil bull market about to crash?
Well, I'm certainly hoping you read History Rhymes and not History Returns, right, Aaron?
History rhymes. Sorry, maybe I read History Returns. Yeah, reading's hard.
Yeah,
Up, down,
so
left, right.
what this chart does is it graphs the current oil bull market, 2021,
Okay.
2022, relative to the 2007, 2008, 2009 oil bull market.
Okay.
And the x-axis is days since $50 oil. So
Okay.
this is when oil popped above 50, and then days since then. This is
Sure.
obviously the price of oil. So you can see that the two are just tracking step for step. I mean, nearly identical paths, right?
Yep.
We took about 350 days to pop above 100 on both. It took another 50, 75 days to pop above 120 on both. And then right around day 385, started cresting and coming down. Cresting and coming down. So these charts look very eerily similar. And then if you were just to look at these charts, what do you say happens to the blue line next? Right? It follows the orange line and it drops. Boom, 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 boom. And it comes all the way down to oil fell from 150 to below 40, nearly $30 during this crash. So a massive wipeout, the biggest wipeout in the oil markets ever. So
now,
that
were we?
chart, sorry, just
So,
let me
before you go any
share.
further, looking at this chart and listening to and comparing the two, how does the geopolitical factors that we're facing right now is that not a factor in this analysis at all?
Yeah, so I
just
mean,
following a trend?
anybody can put up two squiggly lines and say, "Hey, look, it's
Yeah.
a match," so long as you move the dates around. I get that. So I'm not saying
Buck,
go
baby,
short
boom buck.
oil. I'm not saying go short oil because of this chart. What I'm saying is that these lines line up so similarly because the macro backdrops are also so similar. What you have to understand is that for a moment, forget supply. Demand gets killed in recessions. Oil gets killed in recessions because demand gets killed in recessions. Oil just doesn't do well in recessions. In 1990, 91, it dropped about, I think it was about 50%. In 2000, 2001, it dropped, I think, about 40, 45%. In 2007, 2008, 2009, it dropped about 80%. I mean, oil gets killed in recessions. It's what it does because recessions dries up demand, okay? Everybody thinks that we're in this supply-constrained bull market and that those continued supply constraints are going to push oil to $200. That's exactly what they were saying in 2008. So I went through and did like a whole deep dive, and I just read a bunch of articles from January 2008 to June 2008. That's when oil went from 100 to 150, pretty similar to what we're seeing right now. And everything was like oil is going to 200. We have supply constraints in the Middle East. We have supply constraints in Africa. Demand is still pretty strong. Supply demand's way out of whack. There's underinvestment in the industry. Supply growth has been super slow for years. This has been building. We're going to be in a supply constrained market for years. Oil 150, oil 200. It was like I was just reading all the articles. Like if you took all the articles from January 2008 to June 2008, you could literally just, if you didn't have a date on those articles, you would
It's the same
think you
thing.
were reading articles from January
Right.
2022 to June 2022, with the only difference being, as opposed to supply constraints in the Middle East and Africa, we're talking supply constraints in Russia. That's the only
Okay.
difference. So swap out Control F and replace Middle East with Russia, and boom, it's
Russia.
the same. It's the same
Got it.
article. It's the same article. So what ended up happening in 2008 though? We ended up going into a recession. Demand actually ended up getting killed in the back half of '08, and oil prices, everybody thought we were in this supply constrained bull market, but we were actually in a demand crashing bear market. So oil went from 150 to 35 in a matter of a few months. Could that happen again today? I mean, absolutely. I think it is the base case outcome. Goldman Sachs said today, recession over the next 12 months, 30% chance. Next 2 years, I think 48% chance. I think it's higher than that. I think we're going into a recession. I think it's a good thing that we're going into a recession. A mild recession will help us kill inflation, allow us to wipe out the excesses, and form a sustainable base for a 10-year bull market. So I think that's a good thing. But we are probably going into a recession. That means demand destruction. If we get a repeat of that 2008 scenario, it's demand destruction down to 40. And so I think that history is repeating, rhyming, whatever you want to call it. If we go into a recession over the next 12 months, 18 months, there's no way oil sustains 140. It sustains 130. And actually, we've seen it come back down to, it's 110. And last I checked, it was dropping again today despite a broad rally in the markets. Yeah, it's down 1% today to 109. So I think that oil bull market is showing cracks. And I think I'm not making a short oil call. Like right now, I still believe we kind of need that one blow the top off rally. We didn't get that. We might not need it. I'm still doing my research here. I'm not like firm in this call, but I am pretty confident that within 12 months, oil is going to be substantially lower than where it is today.
So at the very least,
yeah, go ahead.
at the very least, people who are hurting at the pumps right now, they have some hope on the horizon.
Well, yeah, and that's another thing. The best cure for higher prices is higher prices, right? That's like a saying in economics. And just this morning, my wife was like, "I'm gonna run to Target. Do you need anything?" And I was like, "I need some Liquid Death sparkling water." I don't know if you know about Liquid Death sparkling water, but it is my favorite. Anyways, and then afterwards, she was like, "You know what? Is there anything closer than Target?" And I was like, "Target's only like 7 minutes, 8 minutes away." Like, what do you mean? She's like, "Oh, I just don't want to waste the gas money. Like I don't want to do that." And that was like that was maybe the 8th time she's brought that up over the past 2 weeks. And, I think those decisions are starting to come into play. If not, they've already come into play over the past few weeks, or people are like, I'm going to choose the restaurant closer to me than the one farther away. I'm going to choose the grocery store closer to me. I'm not going to go out to save the gas. I feel like those decisions are starting to factor in because another thing that's really interesting is I don't know if you spend any time on Twitter or Snapchat or TikTok or Facebook or any of those platforms, but for when I spend time on them and when I'm seeing my other friends spend time on them, we're all seeing a bunch of fear content, a bunch of recession is coming content. So you're starting to see that recession narrative play throughout mainstream media consumption. When I say mainstream media consumption, I'm not talking about the news because nobody watches the news anymore. I'm talking about the social media channels that we all interact on every single day.
Sure. Yep.
There is now recession-driven fears circulating in those channels. So now you have consumers thinking, maybe a recession's on the horizon. Gas is $6 a gallon. Yeah, let's not drive. And
Mm-hmm.
I think that's the demand destruction you are starting to see that is only going to accelerate if we indeed do actually go into recession. If and when people start losing their jobs, we talked about all the layoffs
Yep.
happening. We've talked
Yeah.
about all the hiring freezes. I mean, we're about to get into an economy that's a lot different in the second half of 2022 than it was in the first half of 2022. And
Mm-hmm.
that difference is going to be a demand difference. Demand is going to go from very strong to not very strong. That flip is what is going to probably be the impetus to break the oil bull market. At least that's
Mm-hmm.
my opinion. Again, I haven't done enough research here to be 100% firm in that call. When we have these conversations, Aaron,
Yep. Yeah.
I like to be, I research a ton of this stuff. I really
Mm-hmm.
want to have high conviction in what I'm talking about. And here I'd say I'm like 75% of the way there. I still
Sure.
have some more research to do to really firm up this call, but everything that 75% I have done is painting a picture of an oil bull market that's going to repeat that 2007, 2008, 2009 cycle, and that we could be on the verge of a pretty big collapse in the oil market. So, anyways, that's my short oil thesis in a nutshell.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.